What's up, everybody? Rob St. John here with the Omnipresent Property Group, bringing you another edition of our video blog series designed to help you with all things buying, selling, or investing in real estate and day-to-day home ownership and care. Now, with me today, I've got an awesome guest. I've got Matthew Stevens. He's the branch manager with Open Mortgage in Glasgow, Kentucky. He's got some terrific information. We were actually talking before we got started on the video blog today. Some awesome info he's going to share with you about some questions you need to ask every time you're having a conversation with a mortgage lender, whether it be discussing the purchase of a home or even the refinancing of a home. Matthew's got some terrific information for us. We'll dig into that and a little bit more coming up next. All right, Matthew, hey, thanks so much, first of all, for joining me on this. You and I have worked together on a transaction in the past, and the information that I gathered just in working with you was unbelievable. It was terrific to work with you. I know you've got a ton to share, but first and foremost, start off, tell us a little bit about who you are, where you are, and what you do, and follow that up with, if people have more questions about what we talk about today, what's the easiest way to connect with you?
Absolutely. So I'm a branch manager for a retail mortgage company in Glasgow, Kentucky. Functionally, what we do is we provide mortgage solutions on both purchases and refinances through the state. So we give people various options. We have about 187 investors that will help you get the financial goals that you want taken care of. And so we just take your file, we connect it to these lenders, and let you pick out what's the best option for you. And we kick that all off at iapprovekentucky.com, iapproveky.com.
Awesome. So tell us a bit about it, geographically speaking, if somebody's interested in talking with you about mortgages, what areas do you serve as far as mortgages go?
That's a great question. Ultimately, we advocate having a local lender. Now, local is going to be kind of subjective. Being in Glasgow, right in South Central Kentucky, some people want someone they can go in and sit down and talk to and have that face-to-face conversations. Some people want to know that I can drive to your office if I have to, or you can drive to me if you need to. But functionally, we cover the entire state. I was just finishing up on a deal in Prestonsburg, Kentucky. I've got deals in Pikeville going on, and we're licensed in Tennessee and Florida. And so whenever I have people who are buying, for example, an investment property in Florida, they want to work with a local lender. And for them, that's me, because they know, like, and trust our company.
I love it, and it seems like the way tech, you and I are having a conversation just through a video call here that, the local, it takes on a whole different meaning now. It's more about expertise, knowledge, and communication, it seems like, and I know that's something you take really seriously. So
it is, yeah.
Awesome. So, Matthew, we were talking off camera, and there's some things that are important to know as I kind of rolled out in the intro. You've got some questions in mind that you want to share with those that are watching this. Talk to us about what are some important questions and what are some of the most important things that somebody needs to think about as they start down this, let's be honest, this rabbit hole of mortgage land. It really can be a scary place for some people, especially if they're not getting the guidance and getting the questions answered that they should be getting. Talk to us about that. Just kind of kick it off here with what do people need to be thinking about as they're going into this process?
That's a great question. I'm glad you asked. So it not just can be a rabbit hole, it is a rabbit hole. In fact, some recent studies have shown that going through the mortgage process is physically and emotionally one of the most stressful experiences the human body will endure in their lifetime.
I don't doubt it.
That goes with marriage and childbirth and the whole 9 yards. Whenever they put these measurements on there, it will be a stressful process. So what we want to do, number one, is to equip our customers and the public just on the best questions to ask, what to expect in order to make sure that this goes as smoothly as it can. I tell all of my customers there will be surprises, but we want you to have good surprises. We plan for the worst, we hope for the best, and then ultimately everybody's happy. So one of the first things that I say is, number one, what are your goals? If we don't know what your goals are, and we're not talking about, I want to get this house, I love this 3-bedroom, 2-bath, or I love this school district. Those are sub-goals, but what are your life goals? When do you want to retire? When do you want to stop working? How much vacation do you want to take? And then that goes into answering questions about how much you functionally need to spend on a house or how much you don't need to spend on a house. So many times people get that pre-approval because they just want to have this house and they miss the opportunity to set up a lifestyle goal. And I think, Rob, and correct me if I'm wrong, are you seeing a lapse in the that step home between the starter home and that forever home?
Oh my gosh,
in
absolutely.
Louisville as much as you are in South Kentucky?
Yeah, I mean, it's amazing how often we see people making these giant leaps or wanting to make these giant leaps and not thinking about. I love where you're starting this, because it really does. It means a lot to somebody. They get wrapped up in the heat of the moment of home shopping. The market's moving quick. Everything's happening, so they feel like everything's got to happen right now. And
Right.
to take that step back and start thinking about what is it long term we're looking for, that's huge. That's a massive question. That's got to be something that, and I think it's important too to differentiate, like you said, what the difference between the end goal, what is it you're really trying to accomplish, and know that this home purchase or even the refinance, that's all just a step towards getting you to that end goal. So I love where you're starting this. That's amazing. That's something I guarantee not a lot of people are thinking about.
Yeah, and we want to help you think that way, because so many times the home that you get into now is not going to be the home that you necessarily want to die in, and it's not going to be the home that you want to leave your kids. But it's a solution for the next 3 to 5, 10 years, and so we want to make sure you're equipped to take that jump up. And the way that home builds equity will be naturally in a lot of ways, or you're paying it down. So we want to address that concern. And so ultimately that leads us kind of the next question. Number one, what are your goals? Number two, how are we going to get there? Because if we're not talking about what does your income look like practically to get you there, do you want to be debt free by the time you're 45 or 50? Do you want to take 2 or 3 vacations a year? How does that look like? Does it mean, or what can we do to help you win here? Do you need to consolidate your debt through a refinance this way? Then ultimately, that's why we call our team. We're not just mortgage originators. That's what loan officers are. By and large, loan officers are salespeople who want to sell mortgages. That's how we get paid. We're paid on the loan amount, just like realtors are paid on the home sales price. We're paid on the loan amount. But functionally, we consider ourselves mortgage advisors because we set people up to be repeat customers. Not because, hey, we want you to get your second or third mortgage, but because people who work our plans usually turn out to be investors. And now they're buying 3, 4, 5, 6, 7 investment properties with us because we took them from a W-2 hourly factory worker or a teacher, and now they live in $1 million home and they've got 5 investment properties. And that sounds like a crazy example, but right now I've got an educator in Kentucky who is living that life right now, and he's a millionaire because of following just good, sound financial advice.
Yeah, and it all started with asking, I'm sure, right at the front end of it, what are your goals, and having a very in-depth conversation about the reality of those goals and the path it's going to require to get there. That's amazing. Very
Absolutely.
cool. So keep taking us down this journey, man. This is awesome. So far we've talked to somebody about what are your goals, and now we've kind of started laying the foundation of here's the path that we're going to take to get there. Where do we go from there?
So from there, after you visit our website, iproofkentucky.com, what we evaluate is a few things: income, assets, and liabilities. That's the meat and bones. That's the bare potatoes, bare bones of the loan process. I don't know about bare potatoes. You can cover your potatoes however you want.
It's a little bland, man. Get
yeah,
some salt or something
assets,
on it.
liabilities, and income. That's it. Assets, liabilities, and income. From there, there's going to be a variety of loan options that are available to you. And you will see whenever you close, there'll be a piece of paper that you sign at every closing, if you're a buyer, that says, this is what you could have done conventional, this is what you chose to do on a government loan if you so choose to a government loan. Because there are some fees in there that people are not always aware of. They're funding fees for any government loans, except for a few exceptions. And so understanding that the government might tack on a fee to your mortgage is something you need to be aware of, because if you're going to step up in a home in a few years and they're going to take a percentage off of your equity, your profit, you need to know how much that you're going to have to take that hit. And so what we want to do is we want to lay out the options for you. These are the options you qualify for. Some of them have high limits on lending. Some of them have very conservative limits on lending. Some of them have low down payment requirements. Some of them have no down payment requirements. Some of them have high down payment requirements. So what we do functionally is say, okay, according to your goals, These are the loan products that you're eligible for. But not only that, these are the handful that will help you meet your goals, and here's how. This is what the numbers look like. I'm constantly told every time I'm having a video conference with a customer or they're in our office, whenever I lay out their lending options and I'm showing them 10 to 15 different loan options, that I'm the only one after they've talked to 4 or 5 other lenders or banks that shows them the screen and says, okay, which one do you want? I mean, functionally, it's your choice. It's your choice, but you have to have the tools in your hand to be able to make a choice. And so to say, oh, well, I just want the cheapest rate, because sometimes the cheapest rate is not always the best option. And I'll explain that in a minute.
I was just about to say, so that's something that's always interesting to me. I mean, we talk to a lot of buyers, people coming in through our system in different ways on the website or visiting us at an open house, calling about a listing, whatever it is. And one of the things, the first question everybody asks, tell me about rates. Where are rates? Like that's right. Like the conversation that seems to be going on. A lot of my colleagues on the realtor side of life here, that's what they're telling, that's how they're educating everybody is buy now, rates are down, blah, talk to me about rates and the impact that rates have, and where in priority do you have that conversation as you're talking to somebody about their next mortgage?
Rates are right here in the middle towards the end of the conversation, because the rates do not determine your goals. Your goals determine the rates. And so in that, yes, right now historically is a great time to buy. But you need to understand, since the collapse, the rates have been historically amazing. Our parents were faced with rates above 10, 12, 15, 20% on real estate. And there was a refinance boom decades ago whenever rates dropped to 12%. Now, if I offered a 12% rate, now people are like, that'd be crazy. But functionally, something that we need to have an honest conversation about is number one, rate is directly tied to your credit score. So when somebody says, what's your rate? I say, what's your credit score? Because I can't give you a rate option without knowing your credit score. Someone with a 580 credit score might be eligible for a loan, but then they might not get quite the same rate that someone with that 700 credit score is going to get. Sure. And so the second thing that comes into play is, what type of loan are you going to get? Government loans always have the cheaper rates, but they have those funding fees. Right. And a lot of times they have mortgage insurance on top of it as well. So that conventional mortgage that might have a little higher interest rate on it is going to have more money go towards the principal and interest than these other things. And so that being said, what you need to understand is that if you have financial goals of being financially independent, or to get rid of the mortgage, nobody wants a mortgage, everybody wants a house. So if you have goals of getting rid of your mortgage, then what you need to do practically is to look at those options that meet those goals, whether it's a 15-year, a 10-year, a 20-year, things like that. So I like I said, I live in a small community, so people are often telling me at face value, hey, I've never heard of you. But nobody on the internet ever says that. But hey, I've never heard of you. What's going on? Why shouldn't I go to the local bank? And then I'm evaluating cost and percentages. And whenever I show them 187 lenders who are willing to offer them a loan, and we're saving them $3,000 to $5,000 on closing costs, or maybe a 0.5% on rate, simply because they shop, then that means you've got a huge opportunity there. And that rate conversation is one that doesn't need to be happening up front. And as a lender, I cringe every time I see a realtor advertising a rate in the 3s or a rate in the 4s. Because number one, there's some legal disclosures there that you're putting yourself into hot water. And then number two, you have no idea what the rates is, because you have no idea what their credit score is. So just like saying, no down payments required, or 20% down. We don't know this person's situation. And so we want to have an honest conversation about what your goals are and how we're going to get there before we even get into rates, because of that rate shopping is going to be up to them. And the CFPB encourages it. And I'm not even supposed to probably say that as a lender, because I want all your business, da-da-da-da-da. But realistically, the next thing that people say is, oh, well, I'm stuck because I got quoted at the place online, or
I was just about to dig into that with you.
So people have this with them now, and I'm stuck there.
Yeah. So it's interesting you bring that up. That's one thing. So, again, we talk to a lot of folks that are coming into our system. Somebody comes to me and they say, I'm approved with local bank LLC, and I'm ready to go. And obviously as an agent who wants nothing but the best for the people who want to work with myself and my team, we always encourage them, hey, why don't we look at a second opinion? Let's talk to Matthew. He's got incredible insight into all of this. We're going to make sure that whatever you're getting with Local Bank LLC is the best option for you. And all of a sudden there's this fear, right? This concern. Mm-hmm. Oh gosh, don't do that. He's going to pull my credit. It's going to mess everything up. I'm going to lose my approval. Talk to me about that, because you brought up the idea of shopping, and I think it's important. I tell even people that I sit down with possibly listing their home, I tell them, like, we're going to have a conversation and we're going to agree to work together, or we're not. I'm not for everybody.
Absolutely. That's a great point. So the CFPB encourages shopping. The Consumer Financial Protection Bureau with the federal government encourages shopping. There's a window, don't quote me exactly, but it's 30 to 45 days in which a borrower can shop for a mortgage without a derogatory impact on their credit. It's right on there. You can search for that CFPB credit inquiries, and that will pop right up and explain that. And so in doing so, a consumer needs to understand a couple things. Number one, someone will always do it cheaper. And so you need to understand that. So if you want the cheapest rate, I'll tell you where it is, bankrate.com. You can go on there, you see the cheapest rates available all over the country. And I mentioned my millionaire investor a few months ago. He came to me because he found the cheapest rate online. And 45 days in, he was about to lose the house because they hadn't moved the file at all. And his realtor said, hey, you should call Matthew, see if there's an option. He said, well, I want a cheap rate. And so we looked at it and I said, this is what we can do. This is what we can provide. But functionally, you get what you pay for, Mr. Investor. Yeah. And so, we can get you done in 2 weeks, but I might be a couple $100 here or something like that. And so he was like, well, you know what? This house is worth a couple $100. So yes, feel free to shop. If you're a cheap person, shop cheap. You'll get cheap, and what that looks like. Functionally, this industry is one of the funniest because the entire world is transitioning to big box. Uber, Amazon, Whole Foods, everything's big box, and you find excellence in a lot of the systems put in place by big box. This industry is still suffering from big box crippling effects that's just not working, because your best realtors, just like your best realtors, are not at .com real estate listing your home for 1% or 0.5% or 0%, or Zillow's buying your house. As a seller, you're not getting the best price there, the best representation. In like manner, the best lenders, the people that I'm like, man, those people are tough to compete with. It's not the big .com companies. It's not the big banks, because those lenders are not thoroughly equipped. They don't have a lot of experience. They have a lot of red tape that they have to get through, because all that big box stuff requires the red tape. And so in the same way, Rob, that you run your group very small and efficiently, your best lending options are going to be small and efficient.
Yeah. Yep, that makes a ton of sense. So on that idea of shopping, tell us one more time, what's the easiest way if somebody, they've seen this, they've gotten their pre-approval from local whoever LLC, and they want to see how you can help them out. What's the best way to do that, Matthew?
Yeah, absolutely. We'll be happy to look at any disclosure and say, hey, this is a great option for you. Can't touch it. I've said that before. Or, hey, this is not the best option for you. You might want to look at some options we have. And if you want to reach out to us, you can just do that at IApproveKentucky.com. We're the only military mortgage boot camp certified lender in the state of Kentucky at the time of the shooting of this video. So vets can go to IApproveVets.com.
Very cool. That's awesome. That's good to know. Awesome, man. Well, as we kind of get ready to wrap up, what final thoughts can you leave us? Like, what's the most important, if somebody was to take just one thing from this conversation that we've had here with regard to going down that we talked about, in fact, it is a rabbit hole, going down that rabbit hole of mortgage lending, what is the one most important key takeaway you would ask that all of our viewers consider as we wrap this video up?
It's always okay to ask questions, and it's always okay to say no. You don't have to be stuck here. So many times people feel stuck as they move forward. The worst thing that's going to happen is your closing is going to be delayed, or if you walk away from a house or something, you'll lose your earnest money. And those are costs that you need to consider, but don't get so infatuated with a property that you don't have a good solution. So before we even get to any of those sticky situations, let's make sure you've got a plan in place in order to move ahead clearly. And ask the questions. It's completely okay to ask questions. The worst somebody can say is, no, I can't save you money. No, you can't get more house than you want. No, you're stuck here. But ask the questions and go ahead and get that second opinion. You do know what they call the guy who graduated last at medical school?
What's that?
They call him doctor. He's still graduating.
There's that. Yeah.
So he's out there practicing medicine, and he's the worst guy in town. And he's got opinions, and he's laying them down with authority. It's okay to get that second opinion.
That's perfect. And I know I want to wrap this up with you, but you made a really interesting talk us through, just to kind of to put a nice little bow on this. You talked about people are allowed one of three miracles. If we were talking about off camera, can you kind of roll through that real quick, and we'll wrap this thing up.
So in that vein, like I said, the skeletal base of a loan is income, assets, and credit. And so if you have enough income, it will compensate for a lack of assets. People think a lot of times you have to have 20% down. That's not always true. You're going to have loan options available at 10% down, 5% down, 3.5% down, or nothing down. And so if your income compensates for your assets, then you don't necessarily need a large down payment. If your assets compensate for your income, I've had waitresses buy substantially large homes because they had a substantial down payment, whether they had come into that or they'd been saving for years or something like that. They were able to buy a very nice home on a waitress's salary and tips. And so that's there as well. And then if you have strong income and you have decent assets, your credit doesn't have to be perfect. FHA goes down to a 580, and so does VA. Those are not the best lending options usually with the closing costs and the rates. And so I think you've done videos with credit repair people, but those options exist. And so don't feel like you're stuck renting, because I can tell you paying for your own mortgage regardless is going to save you money in the long run versus paying for somebody else's mortgage, which is exactly what you do when you rent.
Absolutely. Awesome. Well, listen, Matthew, thank you so much. This has been incredibly enlightening. I know the folks that we're getting this out to are really going to appreciate everything you have. Again, folks, don't forget, visit Matthew at iapproveky.com. We'll make sure to have a link in every place that we post this video, so you can just real easily click a button and be right there hanging out with Matthew. In addition, guys, just know I sincerely appreciate all of you taking the time to watch this video. I know Matthew does as well. And if we can be of any answer any questions for you, Matthew's got your back on the lending side. If I can help you with anything to do with buying, selling, or investing in real estate, or just home ownership questions, referrals to contractors, anything like that, feel free to reach out at omnipresenthomesgroup.com, or you can always find me on Facebook as well. So thanks so much, everybody, for watching. I appreciate all of you. Have an amazing day.